guys, and welcome to the second lecture for substantive procedures. Last week we did a whole bunch of substantive procedures and we looked at the auditing standards. Now what I want to do is focus a little bit more on the balances and transactions that are addressed in the cycles and what their IFRS requirements are. I'm not going into detail here, guys. You have accounting standards and your accounting lectures to give you the detail. I just want to refresh your thinking of the IFRS requirements for those balances and transactions so that you can then use that when you develop your substantive procedures. Okay, I want to bridge that gap between auditing and accounting. Then we're going to look at related parties. From an accounting perspective, once again, you do it in accounting, make sure that you understand your accounting standard. How is it going to affect us now when we need to audit related parties? That's going to be our focus. And then finally, data CAATS. So data CAATS being using the computer information system to test substantively now. So previously we did system CAATS. The client had a computer information system, so we tested the controls within that system using system CAATS. Okay, test data, putting a transaction into the system to see how the controls actually work. Now we're doing data CAATS. How can we test substantively because they have a computer information system? Okay, let's quickly go and have a look at your schedule and the SACA knowledge levels for what we're addressing today. So guys, into the schedule, and you can see we are looking at week 3. It's again a double lecture. So we are finishing substantive procedures today and we'll address related parties, which is your ISA 550 and CAATS, computer information systems. I say 230, guys, we'll do at a later stage. Alright, so if we come down to see when we are addressing the work and what the knowledge levels are. So again, we are going to continue with our substantive procedures. So you'll see here, guys, we've said here this is a week 2, but it's also a week 3. We've got to have a level 3 for our substantive procedures, both analytical and test of detail. Now we're doing computer assisted audit techniques. It's a level 2. So that's only going to be part of the lecture. And then additionally, we will be doing in week 3, ISA 550, our related parties, which is also a level 2. Okay, so let's do a recap of what we had addressed last week in substantive procedures so we can build on that. We've looked at some of the auditing standards that help us with substantive procedures for specific areas. Example, what you need to do for external confirmations, opening balances if it's a new client, using the work of internal audit or experts. Okay, we then went and said, well, let's go and look at some general procedures. So no matter what I'm auditing, whether it's a balance, a class of transaction, an individual transaction, I've got a starting point. I put those general procedures down. And then we said, let's go and develop procedures for each of the different assertions based on the risk around that assertion. So we've got a structure to follow. We saw how some of those then fitted into the procedures for the assertions. So we could now go and audit a balance or transaction with what we've got. I now want to say, okay, we can do it from an auditing perspective now. Let's just go and recap some of the accounting so that you can add to these procedures because you know exactly what IFRS requires for that balance or transaction. Guys, I'm not trying to override your accounting lectures, please. Your accounting lectures have all the detail. This is just so that you can make the connection between the accounting and auditing, because often you don't make that connection and you say we're just doing auditing, but we are auditing that they have complied with IFRS. So you need to be very comfortable and aware of the IFRS requirements. Okay, so just a quick little diagram here. We're going to look at the cycles in terms of what class of transaction or what account balance is affected in each of the cycles. So your revenue cycle, you're going to have revenue and debtors. In your purchases cycle, you're going to have purchases and creditors. In your payroll cycle, you're going to have your payroll expense plus the liabilities that go with it. And then you're going to have your inventory. You're going to have the purchase of inventory, which is actually addressed in your acquisitions. And then you're going to have the manufacturing, which we're going to deal with under inventory. And then finally, your finance and investment cycles. Again, we can't look at every balance or transaction because finance could be multiple different things, loans, leases, and investment could be multiple different things, PPE, investment properties, whatever they choose to invest in. And then guys, here you can see I've got the visual of the cycles, but we know there's multiple source documents before it lands in the journal, GL, TB, and financials. So now I want to take us back to when we did the cycles, where we had all the different source documents, so that we can see which source document results in the transaction needing to be initiated and recorded in the journal, and what subledger is affected. So let's go to where we did the cycles in the planning stage. Okay, so this is what I was talking about when I said I want you to go back to your cycles. So if we look here, we've got our revenue cycle. You need to know all the documents. You can forget about all the controls. We're just making sure you have all the documents. They have to have an external sales order, customer application form, credit limit must be set. They need to have the internal sales order and a price list. Picking slip for picking, delivery note. This is the document that proves that risks and rewards have transferred. So whenever I want to test that revenue should be recorded, I need to see the delivery note. The invoice is then how they go and record it. So when I want to test the accuracy, have they recorded at the correct amount, I need to go and test the invoice and I need to trace the quantity back to the delivery note and the price back to the price list. Okay, so that's how I'm going to get the detail of what has been recorded. When we're looking at the debtor who's made payment now, they send that remittance advice, which is going to detail the invoices that have paid. So if I can see that an invoice has been paid, then it proves that that debtor existed for at least that invoice. That's why he's paid. So for our subsequent receipts testing, it's that remittance advice that I'm looking for. If we go look at our purchases cycle, there needs to be a purchase requisition, a purchase order with a price list, the delivery note. The goods received note is now the internal document that proves risks and rewards have transferred for those goods that have been received. So when I need to test if they should be recording that purchase, I want to go to the goods received note. But for the detail, the rand amount, the invoice from the supplier is going to have those details. And remember, we said for accuracy, quantity and price. So quantity, I'm going to have to go back to the goods received notes, and price, I'm going to have to go back to that price list. Okay, there is a creditor statement now, which is an external document. So I can do recons of the creditor statements to the creditor's ledger to test the accuracy or the valuation of the creditor. Okay, because there is that external document. And then if we wanted to potentially identify some trade payables or creditors that may not have been raised, that should have, by looking at payments made post year end and tracing them back to the accounting records, I can see if they had raised the item, and if they hadn't raised the creditor, then they hadn't recorded the creditor. That should have been recorded. Once again, based on the details on that goods received note. When did risks and rewards transfer? Okay, then the payroll cycle. There has to be an employee contract that proves that employee is a valid employee of this business. Any changes to that are on that amendment form. Then with our wages, the clock cards are going to prove to me when that service was performed, and therefore is it valid that they've recorded it. What is the date on that clock card? The journal is then going to have the details based on the hours in the clock card and the rates up in the employment contract or the amendment form if the rates had subsequently been amended. That's how I'm going to test for the accuracy, because the details are there. Remember up top here, guys, the employee gets a number. So we can also use employee numbers for our sequence testing. And then just remember, this is a cycle where there is a physical employee. So I don't necessarily have to go and check contracts. I can actually go and see the physical employee. He's there. Is he in the payroll? Take someone in the payroll journal, go to see if there's that physical employee to make sure they aren't recording employee expenses for fictitious employees. Okay. And then obviously there is that PAYE return, which is going to be very helpful because you're not going to pay PAYE on a fictitious employee. So ultimately that's a nice external document where you can check that an employee is valid and does exist because they are on that return. Inventory cycle. We're looking now in the production. Remember that whether they produce or whether they just retail, there will always have to be a quantity element, and that would be the stock count. Okay, so you'd always have to make sure the quantity is correct by attending a stock count, doing test counts yourself, and then agreeing the total quantity in the accounting records to that count. But now we're looking at your costing. By looking at the production cycle, there should be a schedule, raw material requests, raw material issue notes, your job card, which is going to have all the detail of what makes up the costing for work in progress and also what makes up the cost for finished goods. So it's really important when we want to test the accuracy or the valuation here that we check the quantity of the raw materials to the raw material issue notes, the labor hours now to another cycle to the clock card here, and then your overheads to a schedule that they should have showing how they have allocated their overheads. Okay, finished good transfer notes is the document to take it out of work in progress into finished goods, but the detail of the finished good costing is in this job card. So lots of work is going to be on that for your work in progress and your finished goods. And then finally, your finance and investment cycle, guys. It's not a big cycle because transactions don't happen here too regularly, but there must be a budget that they have planned for this purchase or sale of an investment and for the financing element of that. Minutes of meetings must be there where they're making that decision. And then you're going to have a contract or an invoice which will have all of the details for that decision. Okay, and that's going to have whatever you need to test for the accuracy of this or the valuation of this, whether it be for share issues, then the number of shares, the rate at which they're issued at, the date, or whether it be for the purchase of a property, the date of the purchase, the costing, the quantity, if there are multiple items, all of that will be on that invoice and contract, and you will test the details there. Okay, so you must know your documents, you must know your flow, because you're going to have to go back to certain documents to test the final document, which is what is used to record the journal or the general ledger. So let's start with revenue.